So today I want to take it back to the basics a little bit. We're going to be talking about 5 things that I wish I knew when I started investing. Now, some of this stuff is going to be stuff that is still going to be useful if you're already well into your investment path. You don't have to be a beginner that's never touched investments or money before to follow some of these tips. And this is stuff that, I even did know some of before I started, but it's important to know the value of it and to really believe in some of those fundamentals. And of course, we're going to have some tips that aren't exactly fundamentals, but highly recommended nonetheless. So let's go ahead and jump right into it. The first thing that I want to talk about today is when you're first starting to invest, you don't want to mess with options. If you don't even know what options are, that might be a good thing. They can be fun eventually when you know what you're doing and you have some money to spare and money to play with. But options are a huge gamble. And it's not worth the risk, especially when your money is first starting out in whatever account it may be. It is so much more valuable then than any other time. The money you're first starting to put away has time to compound and become so much bigger than it is in the current moment. You don't want to be wasting that with potential losses on options. Now remember, options are something that can just expire worthless. You can purchase an option for any amount of money essentially. It could be $5 or it could be literally $5,000. And in 2 weeks, depending on whenever you choose that option expiration date, it could just go ahead and expire worthless, meaning you lost all your money. Is there a chance to make big money? Yes, but at that point, it's more like going to a casino than actually investing. So the point being, don't start with options. You'll have time to learn and understand how the market works, what you're comfortable with losing, and it's important not to get greedy because greed is going to cost you in the long run. So options, keep them off the board for now. Wait until you're a little bit more, well versed in the stock market, in investing, and until you're ready to really lose money and not feel bad about it, because you will feel bad about it later if you do it at the beginning. So while I wouldn't really say that's part of the fundamentals, it's something to keep in mind. But let's go ahead and talk about things that are a little bit more common and a little bit more reliable that are still very important to keep note of. And that point being, it's very important to, first of all, open a Roth IRA account and then to max that account out before you're going to be putting money in other investment accounts. A Roth IRA is one of the best ways to grow wealth, and you are not going to regret maxing it out. Remember, what a Roth IRA account does is quite simply give you tax-free money when you retire. Now, you do have to pay taxes on the money going into the account, which is just normal stuff. If you're working a job, you're going to pay taxes at the end of the year. That earned income that you earn from your job and you're paying taxes on, you can just invest. It's not a whole different side of things. It can sometimes sound a little more confusing than it is, but the point being is that it's not going to be taxed later. It's going to be taxed now, as is everything else that you're spending your money on. So once you put that money in the account, though, if you put in $10,000 and it grows to literally $1 million, you're not paying taxes on that money when you take it out. Whereas almost every other investment account, when you take out that $1 million, you're going to pay long-term capital gains, and that's going to be somewhere, it depends on your income level, but probably about 15, maybe 20% on that. So if you're talking about $1 million, you're having to pay $150K in taxes. Whereas if you're putting that in a Roth IRA, then taking out the $1 million, you're only going to have to pay $0. You just get that money because it's already been paid for when you first put it in at $10,000. So it's a big bonus to not pay taxes when that money grows, and over the years, potentially 20, 30, 40, 50, 60 years, it will grow to be a huge amount compared to what it is now. So open a Roth IRA, make sure you're maxing that account. You have $6K per year, and then once you hit a certain age, a little bit later in life, you're allowed to put $7K a year in, but max that account out. Make sure you're putting all your money in that first, and you're taking advantage of the money that will be tax-free when you take it out. Now, on the other side of that, it's actually very important to also max out your 401k. Now, not everybody just has money to be throwing everywhere, maxing out this account, maxing out that account, but a 401k at the very least should be maxed out to the point where you're getting your employer's match. Now, what I mean by that is if you have a job where your employer does a 401k match, they will likely say something like, we'll match 4% of your salary 100%. Now, what that means is if you make $50,000 a year, they'll match 4% of that $50,000 at 100% of whatever you put in. Long story short, if you're making $50,000, it's going to be $2,000 that they'll match if you put in. So if you put in $2,000, they're going to also put in $2,000 for you, making your total investment amount now $4,000 for that year instead of just your own $2,000. You're literally getting a free $2,000 just because you decided to go ahead and invest your $2,000 as well. So hopefully that makes sense to you. You can of course look up more if you want a longer explanation, but it's quite literally free money as long as you're investing the amount that they say you're allowed to, 4%, 5%, 6% even, depending on what it may be. You can do the calculations and max at least that amount, because it's just going to be getting that free money, whatever they're going to match to your input. And don't be discouraged if you don't have a 401k account yet. If your employer doesn't do any 401k matching, some employers don't. Maybe you're even a little bit younger, you don't have a full-time job or anything like that. So don't be stressing. There's plenty of time to get to that point, and it can always come later in life. So don't worry too much if you don't have a 401k. If your employer doesn't offer that, you can work your way up, you can figure things out. And then in that case, it's just a good time to definitely focus on the Roth IRA for the time being. So then you can move on to that 401k account when you do get that chance, if it does arrive. The next thing that I want to talk about is just simply don't be discouraged by losses, and especially unrealized losses, because there's going to be plenty of times where the market is going to tank. And in my short time of investing, I'm only 22, I've been doing this for a number of years now. But in that short time, I've seen 2 huge declines in the market overall. And it's, scary. It's definitely scary. But it's important just to stay calm, because this is stuff that I read about before I started investing. Don't worry about losses. Don't be trying to sell and time everything. Just keep what you have. If you know you invested in things you believe in, and you think that it's going to turn around eventually, don't try to time things and sell and then buy later. Of course, if you're a professional, if you're really advanced, you can try to do that stuff. But for beginners, the fundamentals and overall, anybody who's investing is going to be better off just sticking to what they know and holding on to their portfolio, not making changes during those times. And as I've seen firsthand, both of those times where my account started to dive, I just held on to it, and things rebounded. The market reacts to things, and things will eventually rebound. It could take a longer time in the future with future declines and future crashes, but the likelihood of it rebounding is so high that you should remain calm. Try not to look at those losses. Try not to dwell on it, because you can come back from it. Just remain calm, hold on to your positions, and things can rebound. And it's a learning experience. Honestly, the way I see dips nowadays, both in cryptocurrencies and in stocks that I'm really fond of, is a buying opportunity, because you can just add more to your portfolio for a cheaper price. So don't worry about selling. Actually think of it as a good thing, because now you can actually invest more and get more per dollar out of what you're spending. So it's actually kind of a good thing if you think about it that way. It's important to look at it from a different perspective sometimes. Now finally, I do want to say that it's very important just to be reading up on things. I don't mean spending 5 hours a day reading stock market books and other investment books or anything like that. But it's important just to be, aware of things, whether that means reading a news article about the stock market every couple of days, browsing Reddit for 15 minutes a day on, a finance subreddits or the stock subreddits, and even Wall Street Bets subreddit. I know it sounds crazy, but it's important to see different angles, see what different people are saying across different mediums, and just pick out, some of the consistencies, some of the things that you end up agreeing with, and seeing that, okay, that makes sense from this perspective as well. Because no one is going to have a perfect idea of anything. Not the biggest professionals on CNBC, not the biggest idiots or maybe geniuses on Wall Street Bets. Everybody's going to have different opinions, and no one's going to be perfect. But when you start to look at them all over the place, you're going to get a better understanding of, kind of everything across the board, so you can make the most informed decision about some of the things you want to choose and decide on, because it can be stressful. But if you have a wide-ranging knowledge from so many different sources, you just feel that much more comfortable making your decision and knowing that you've done the best you can, research side of things, and you got to take a shot. Your best informed decision is where you're at now, and we're going to go with it, So it's important just to stay up to date. Don't go crazy about it. You don't need to read every little thing. You don't need to be spending hours and hours a day. But just try to stay up to date so you feel better about it. You feel more informed, and you don't feel like you're running around like a headless chicken. So those are some of my pieces of advice for people starting out on the stock market, or even if you've already started and just want a refresher to remain calm, because the market is kind of crazy right now. There's a lot of talk about a future crash happening. I mean, we've already had a few down months recently, but things rebound, and you never know. The economy is looking interesting right now. Who knows what will happen in the next few months, but just remain calm, stick to some of the basics, and just think things through. Take things slowly and take time to learn, slowly appreciate where you're at and where you can go if you just remain calm. So, thank you guys so much for watching. If you enjoyed, please do drop a like and subscribe to the channel. Check out some of my stock opening videos if you'd like. They'll probably be on the screen anytime here soon, and maybe in the description as well, or you can just check my channel. Follow me on social media as well, and if you guys need to open up any new investment accounts, whether it's Robinhood, Webull, or anything else, I will have some links down below. If you guys sign up with those links, you'll likely get a benefit like a free stock or anything like cryptocurrency bonus, and I will actually receive a benefit as well, so I would appreciate if you would use those links, but of course it's not required. Other than that, comment down below what's your favorite tip that you've ever heard about investing or the stock markets or anything else alike. I'd be curious to hear it. Anyways, thanks for watching. I'll see you later. Peace.